afternoon, committee members. John Chavez from the Department of Animal Services. I'm seated here with Mark Salazar, our Director of Field Operations. Mark, among many of his other responsibilities, oversees the wildlife group. So that particular group is very helpful in helping us come up with these recommendations. As Councilman Koretz and Councilman Farrell know, there was a motion that was introduced that asked us to come back here and report on more humane trapping efforts. That report is in front of you. The way we researched this, we asked our wildlife team, many years of experience out in the field. Unfortunately, they see a lot of bad stuff in the field relative to humane trapping. They also work very closely with the Humane Society. They had done a lot of research on humane trapping methods, and we did incorporate some of their suggestions. Our department is recommending the ban on certain types of traps: body gripping, body crushing traps, snares, deadfall traps, and dog-proof raccoon traps. Primary reasons for that is they can cause untold suffering, cruel death. Also, they're indiscriminate. You may set a trap for a skunk and trap a dog accidentally. And it doesn't address the root problem of why wildlife is going into human habitat and addressing those types of issues. We also wanted to take this opportunity as a department to look at humane trapping methods that we use or that we do endorse, like box and cage traps, but to make those more humane, to make those safer by imposing more monitoring and inspections, by ensuring that those traps are not put in extreme weather conditions or exposure, the use of non-poisonous bait, and also upping fees and fines. What this report does not address are a resident's ability to trap rodents such as rats, mice, pocket gophers, ground squirrels, and the like. So that is our report in a nutshell. We're happy to answer any questions that you may have.
What's an example of the more humane trap?
The more inhumane traps?
The more humane.
Would be box traps, would be traps where an animal actually steps into a sealed compartment.
Today's on March 4th, and this is the Los Angeles Audits Committee. I'm Nuri Martinez, the chair. I'm joined by my colleague, Councilmember Bob Blumenfield. Mr. Parks is going to join us shortly. Madam Clerk, can we take items 1 and 2 together, please?
Okay, for item 1, you have a report from the Controller's Office, and this has to do with the fiscal year 2012-13 audited financial statements of the Mobile Source Air Pollution Reduction Program. For item 2, you have a report from the Controller as well, and this is regarding the audited financial statements of the Mobile Source Air Pollution Reduction Program for the fiscal year ended June 30th, 2012.
Thank you. Do we have anyone from the department here? Who would give us an overview of the Mobile Source Air Pollution Reduction Trust Fund? Would it be?
Typically the Controller, and I believe Ms. D. Allen is representing the DOT. And you can reply to any questions, right? Okay.
Would you want to come forward? Just join us at the table. Thanks. Do you want to give us a quick overview of the findings?
Will the auditors go first? Mm-hmm. Okay. Good afternoon. My name is Melba Simpson, partner with Simpson & Simpson. And I have Frank Liu, who's our audit manager in charge of the day-to-day.
Can you speak louder into the microphone?
Yes. Good afternoon. My name is Melba Simpson, audit partner with Simpson & Simpson. And I'll give you the brief overview of our reporting responsibilities to the board, and then Frank can give the highlights of the audit. Okay? Our responsibilities under generally accepted auditing standards is, after our audit is performed, to be able to express an opinion as to whether or not the financial statements for the Mobile Air Pollution Fund is materially correct. That's prepared by management. And we're also supposed to let you know whether or not we had any difficulties or misunderstandings with management during the audit. And I'd like to report to the board, to the audit committee here, that there were no unusual transactions, there were no misunderstandings with management. And what we mean by that in terms of disagreements is as if there's any disagreements with respect to the application of accounting principles. All of the accounting principles were consistently applied from year to year, covering both 2012 and 2013. We also are to let you know if we are aware if management consulted with other CPA firms during this time for any type of accounting issues related to this particular fund, and there were no, to our knowledge, correspondence or any type of communication with other auditors or other CPA firms. Also, we're supposed to let you know if there were any accounting estimates used by management that were significant, and there were no significant estimates. This fund is coming from the vehicle tax and applied to the program appropriately, so they don't have any significant estimates that they have to make for the financial report. I'd like to report that the end results of both years' audit is that you have a clean, unmodified opinion on both years' audits. Frank, you want to give them the highlights of the current audit?
Sure. Good afternoon. This is Frank Liu, Audit Manager from Simpson & Simpson. Based on our audited financial statements of the mobile source, as of June 30, 2013, which relate to first item, the assets of the fund was approximately $4 million. And after account for liability in the amount about $0.4 million, there's a net asset or net fund balance of about $3.6 million, which is restricted for eligible assets. And as far as the revenue for the year would be approximately $4.6 million, and with expenditure about $4.3 million reported on the financial statements. And during the audit, we do notice a minor instance of non-compliance, and it's related to the timekeeping for the direct charge that's for the labor costs, the salaries for the employees charged to the programs. And we have provided recommendation to City Department to provide records and maintain timesheet to support the time charged to the program. And management has concurred with the recommendation and implement recommendations.
But there were no major material non-compliance in the programs for the 2 years.
But the reporting issue on how staff were spending their time, how they were recording their time spent on these activities, there was a $30,000 cost to that, right?
That's correct.
So is the city out $30,000, or do we have to, how is that being addressed?
That cost has incurred, and basically that cost is being questioned, and depending on the grant or whether or not they were the direction they would like to do, they can, if they decided, they can go ahead with basically reduce the revenue from the next funding year.
So we haven't, are we paying the $30,000 back, or is it just going to be deducted from next year's
Let me just
payment?
clarify. I'm Dee Allen with the Department of Transportation. I'm in charge of parking and also sustainability in this program. And I can give you a little bit of background on the history, but what we're going to look at, the $30,000 was from the City Department. With this fund, we fund a number of city departments, not just transportation. And one of the departments that we were funding for their work, they didn't do the timekeeping correctly. So I've been in conversations with that office to make sure that now they're going to go to D-time, so it's accounted for. But as it relates to the $30,000, that's already been done. We can't correct that because it was the past year. So the option that we're going to look at is whether the AQMD will reduce the allocation, as he suggested, that it's about $4.6 million per year annually, and so we would look at reducing that allocation by $30,000 to cover that cost. Another way we could do it, and I haven't looked at the financials because I'm not the accountant, but I think in the proposed budget, we budgeted a dollar amount for compliance in the proposed budget that we're asking for us to take care of it. But either way, it will probably come off the back end. So it will be 4.6 minus $30,000 for the coming year.
So the recommendation to correct the detailed record keeping, has that been implemented?
Yes, we've been in consultation with the office that that this finding was from, and so we work with them. And actually, yesterday I had a phone call, and they're putting the staff on D-time, and so D-time you'll be able to track the work that's been done, and then we could verify the tracking. Because actually the $30,000, the work was actually done, it just was not documented the appropriate way.
You say on D-time, does that mean documented time? What is that referring to?
Documented time?
Yes.
Okay. Don't know all the different terms.
Yes, sorry.
Sorry, I
question?
kind of jumped in, yeah.
No, no,
Go
it's
ahead.
okay.
No,
I don't wanna-
I just had, my main question was how we were going to, whether we were going to be out 30,000 or how we were going to pay that essentially back. 'cause
Yeah,
we didn't-
we're going to be out 30, but we'll probably just have them, as I say, in the future allocations, because we get checks quarterly from the district, and so we will just, it will just be reduced by $30,000 in working with their accountant over at AQMD, South Coast Air Quality Management District, I'm sorry.
So is this the time, which agency was it that had the time issue?
The mayor's office.
I'm sorry,
The mayor's office, yes, and it was the prior administration, mayor's office.
and is this a broader across the board, or is it just,
No, it was just the mayor's office. We worked with a number of the other departments for a number of years, and so they're very familiar with what we require as a part of the reporting, and so they've been fine.
it's not a broad scale problem? that
No,
we
it's
think
not.
Beyond this one particular thing. And then, so there's 3.6 million balance in the fund, and then we get 4.6 per year. And how are these funds programmed? Who decides?
Basically, it goes to council as a part of the budget. It is Schedule 10 in the city's budget, and these projects are allocated and requested during the budget process. DOT sort of coordinates that request. You would see it in our budget. Some of the money has to go to reducing emissions from mobile sources, cars, heavy-duty trucks, that kind of thing. And so we have funded in the past, we funded sanitation with some of their heavy-duty vehicles, paying the incremental difference, not for the total amount. We funded some of the city's rideshare programs. We funded Ciclavia from it. We funded bicycles for LAPD in terms of their community policing.
But it's a council action each time.
It's a council action that will be a part of the budget. So when you approve the budget, every year we tie it to the budget, so council approves the appropriations for that, and it's Schedule 10 in DOT's budget, just so you're aware.
And is it unusual to have such a large carryover, 3.6 million each year?
Well, probably the way the carryover, it's not unusual. It's because we are probably looking for the invoices that are coming in. So it's been earmarked. It's earmarked specifically in the budget. And sometimes, especially with heavy-duty vehicles, it takes a number of times before they get the vehicles on. They can order them and get them on. And so
It's not that this is
just sitting there with no...
unallocated, it's just
Right.
sort of unappropriated.
Exactly.
And the funds are restricted for those specific uses in compliance with the grant.
Right.
But there's not a pot of money sitting there that
No.
we can
With nobody's name on it.
get our paws on and.
Yeah.
No. No.
All right. Always looking for more money for the city.
More money,
Of course.
that's right. Pay for more streets and sidewalk repair. Okay, that's all the questions I have. Do you have any other questions? Thank you so much.
Thank
Thank
you.
you very much.
And there are no public
Cards,
comments?
Madam?
There are no public comments on this. Do you wish to note and file?
Yes, no objections. We will notify both items.
Thank you.
Thank you. Madam Clerk, please read the third item into the record, please.
For item 3, you also have a controller report, and this has to do with an audit of salary continuation payments made to non-sworn employees under the city's workers' compensation program.
Hello, sir. You from the Controller's Office?
Yes, I'm Rick Degucci from the Controller's Auditing Division. Our audit report was issued in April 2013. The primary objective was to determine whether the city could achieve salary savings by paying workers' compensation benefits differently. We also evaluated controls in place to prevent any overpayments from occurring, and our audit was limited to analysis of only non-sworn employees. So just in the way of background, for employees who incur a job-related injury that temporarily prevents them from working, the state law requires that the city pay the employee at least the lower of 2/3 of their salary, or $1,067 per week, and that rate is referred to as a state rate. For the first year of an employee's injury, the city has elected to pay employees a higher amount, which is their full pay less state and federal taxes. And these payments are referred to as IOD, or Injury on Duty payments. And these payments are made through the PACER system, which is the city's payroll system. For the second 52 weeks of temporary disability, employees receive the state rate, and these payments are made through the Link system, which is operated by the Personnel Department. IOD payments to non-sworn employees during the first year of disability totaled $19 million in 2012, which was 52% more than what was paid in 2009. IOD payments to sworn employees is much higher at about $35 million per year. Sworn employees receive 100% of their salary tax-free. However, we do not include sworn employees as part of our analysis because state law dictates how they will be paid. So our major finding was that the city could save about $5 million a year if it paid the state rate for the first year of an employee's disability. The $5 million represents about a 25% savings over what is currently paid. We benchmarked 7 other government agencies in California, and 5 of them pay the state rate, are very close to it. For example, one agency paid 70% instead of the 66.7%. One pays the same rate as the city, and one pays 85% of the employee's salary. Okay, we also noted that after considering income tax effects, most employees likely make much more while they're on IOD as opposed to working. The IOD payments are not taxed. Therefore, many employees can effectively earn about 125% or more of their salary while on IOD after considering income tax effects. So this may provide little incentive for people to rehabilitate their injuries. In fact, our analysis shows that employees appear to be staying off work much longer than they were several years ago. If the city began paying the state rate for the first year, employees could have a greater incentive to rehabilitate their injuries, therefore resulting in additional savings beyond the $5 million a year. We also noted that because of the rules for paying IOD, 2 employees with the same exact job class, length of service, and salary could receive widely disparate IOD payments. And that's demonstrated on page 18 of the report.
Page 10.
So we have 2 employees that make $4,000 biweekly. One had 0 federal and state taxes taken out of their return or taken out of their paycheck before they got hurt. So their IOD payment's going to be $4,000 less 0 taxes, which is $4,000. They have their union dues and retirement contribution deducted, and that person gets $3,520 to take home. The other employee, he had federal and state taxes of $1,000 taken out before he got hurt. His IOD payment's going to be $4,000. His regular salary, less his federal and state taxes, he's only going to get $3,000 of IOD pay. Then you subtract out the union dues and retirement, his net take-home is $2,520. So the first employee is getting 140% more than the second employee. And that doesn't make sense to us because they're making the same salary. If the city paid the state rate, then this inequity would be eliminated. And then lastly, we identified $127,000 in potential overpayments. The actual amount of overpayments would be much higher since we only selected samples. We received recent correspondence from the CEO in January, which indicated that in future labor negotiations it will push to lower the IOD benefit paid out to employees that is more in line with the state rate.
So by way of background for myself, how did we ever get to the point where the city doesn't pay the state rate? Did we ever?
Not to my knowledge. I know that in 1994 there was some type of change that was made, but I don't know exactly how it was paid before that.
I was looking through my notes, and I don't know how we got away from not ever having to pay the state rate. You don't know? And the issue on the overpayment, does that have anything to do with replacing the link replacement project, or is that something completely separate?
Well, there were like 3 different types of overpayments that we found. Like one involved So you're only limited to 1 year of IOD pay, which is 2,088 hours. So we found that some people received more than the 2,088 hours. So that was for their first year of injury, which was controlled by the PACER system. And then we also found overpayments where they were paid more than 2,088 once they went onto the state rate, which was through links. So we found both kind of overpayments. And we found a third type of overpayment where employees were getting the state rate and the IOD rate. They were getting both payments at the same time. So we found three types of overpayments.
So how are we fixing that? How are you fixing the issue on these three fronts on the overpayment side?
That would be personnel in terms of the link system, and then it would be our payroll side in terms of the payroll, in terms of PACER.
Well, I didn't see any recommendations. So you found these three examples of overpayment, but I didn't see any recommendations of how, unless I missed it, on how we would remedy this so that we can stop this issue of overpayment.
Good afternoon, Dave Notmeyer, Personnel Department. With the replacement of the workers' comp claim system, the link system, with the new Aon IVOS system, we will have an interface with the city's payroll system to prevent the overpayment of IOD. So that will be coming in May of 2014. So that's what we're going to be doing to prevent these type of overpayments in the future.
So between the time you've conducted the audit, which is April of last year, and the time you replace the links, you replace the link system next year, that's almost 2 years have gone by. Have we ensured that we're not overpaying? I'm sorry, it's not 2 years, it's a year. It's between, it's April of last year to May of this year.
Yes.
So what are you doing in between to ensure that we're not having to deal with this overpayment issue?
Sure. So Personnel Department identified this as a weakness back in October of 2008, and we submitted a request to do an enhancement between the link system and the PACER payroll system. Due to higher priorities, that was set aside. So what we have done in the interim is we've added some enhancements to the link system. It's a 35-year-old claim system. So while we cannot prevent the overpayment from occurring in PACER, we added enhancements to our link system where we track the hours that have been paid. It sends up warnings to the analysts when they are approaching the IOD limit. But until we actually have the interface between the two systems, there is not a way to prevent somebody from paying over the IOD limit.
So this issue has been going on since 2008, or even prior to that? That's when you first picked up on the overpayment issue?
Correct.
And so what are we doing to modify the IOD payment level to be comparable to other government agencies? Is that something that needs to be negotiated through our collective bargaining?
Yeah, fair. It's the Florida City Controller. That was one of our recommendations to CAO. As Mr. DeGucci was making a reference to, CAO responded back in January, and they said they are going to pick that issue up in the upcoming negotiation with unions, I believe.
So that's the only way this committee cannot, can we direct the CAO's office to report back in 30 days? I'm just brainstorming in terms of how do we modify the POD payment. The only way to do this is through collective bargaining?
My understanding is that has to be done through collective bargaining through CAO with instruction from EERC.
I want to note that...
I believe there is someone here from CAO's office.
Councilmember Parks has joined us. Thank you.
Thank you.
Did you have any questions?
Yeah, I was just wondering, it seemed like we fixed this several years ago, at least on the sworn side, where we had employees making more on IOD than coming to work, and there was an alteration to the system at that time. And it just seemed like we're going back through this. Do we have an idea how did we get where we are, or what caused the system to pay more while on IOD?
We did not look
that was negotiated with the employees, or is that just a quirk in the system, or was that state law, or what?
Well, for sworn, it's state law, and the sworn is getting 100% of their salary tax-free.
Okay, now that's on IOD long-term, right?
This is for their first year, of
But then they go to state rate?
Yes.
Okay, but sworn historically have gotten what IOD was, 100% of their salary tax-free. But at one time, it was going above that several years ago, and it was altered. But I was trying to figure out, how did the non-sworn employees get where we are today? Because I thought the city fixed this years ago.
To our knowledge, is at least since 1994, this has been the process, this has been the policy to pay IOD for non-sworn less the taxes that have been taken from the employee's paycheck. Prior to that, we got no knowledge of it, but before that, whether it was a state rate or not.
Yeah. But it leads me to believe, if it's just since the 90s, that had to be something that got negotiated in that fashion, because at the time they fixed the LAPD, the civilians were not in that same fix. In fact, they often used the civilian payment schedule as an example of why the police were out of sorts. So it's something that got negotiated, or something that changed the formula that happened in the early 90s that caused people to make more money than they were making prior to that. I'm just wondering if we know what caused that.
Right. My name is Dana Brown. I'm from the CAO's office, and certainly one thing that is for sure is that the amount of money that we pay to non-sworn IOD is codified in the MOU, so it definitely is something that we would need to renegotiate. And the CAO has already started the process as we begin to prepare for the coalition bargaining with the majority of the civilian unions. We've already begun the process of preparing for that, and we have already met with EERC and received some bargaining instructions with respect to the overall process, and we are planning to get together with the personnel department to come up with some very specific proposals that will address some of the issues that are brought up in the controller's report.
Yeah. Because I would guess that somewhere in the negotiation that someone changed the formula, and it was just kind of glossed over in what they call specials in the negotiation, and it was never a big issue, but yet over time the dollars begin to pay more and more and more. But it's the formula that had to be blessed somewhere, and if you got to renegotiate it, you can bet that it was authored as part of a prior MOU.
Actually, it's a little bit less a formula and more just sort of language that says that whatever your take-home pay is at the time of your injury remains so. But the ad code does allow employees to change. They have a certain amount of time that they're able to change their tax exemptions.
But when I say formula, that's what I was talking about. The parameters of what you used had to get changed for this to occur.
Right, yeah, so we would have to negotiate that. And I think that there are some maybe different nuances that have to be looked at to see whether or not an actual savings would be, if we would experience that overall if we change the formula. Because there are, between different rates of retirement contributions and health care contributions and different things kind of sort of change that from employee to employee. So we could, if we followed a different model, perhaps a different percentage, depending upon what all of that included, we may not experience some of the savings that we look to experience. So we're going to talk about that at length with the personnel department along with the controller's office and make sure that our proposals meet the needs that we want to achieve.
One thing I was wondering, do you have the ability and language to create something that would say, irrespective of your insurance and your tenure, whatever, you cap out at 70%, something like that, to where that's your max as your IOD pay? Or can you be that general?
I think that if we're going to negotiate something, we certainly can put whatever on the table that that we want to, as long as we're sure what that means and how that changes. Employee to employee, just to make sure that we're getting, we're fighting the right fight and that we get what we want at the end overall. So we'll be looking at that very closely.
Thank you.
Mr. Blumenfield?
Yeah, I'm trying to understand. You're saying that it's not a formula, but it was language that said the take-home pay has to be the same.
Right.
But that's not the post-tax take-home pay, it's the pre-tax.
It's actually the same. I believe it is the post-tax. So if you in fact change your taxes,
right,
you will get a bigger check. You're able to get a bigger check in that way.
But there's restriction in terms of whether you can change your tax status prior to going on IOD. Admin code does not allow that.
But it still sets up that inequity where, depending on, your withholdings and everything else, you have a vastly different amount.
Yes.
The same employee, the same work, and how can that be fixed?
Well, we would have to sort of look at exactly what the problem is and make sure that whatever proposal we put forth addresses it. So if the issue has to do with the ability to change your tax status, and if we are able to fix it just through that, then perhaps we would focus on that if the law allows for that, or if we want to negotiate a different percentage or a different rate or a particular cap or those sorts of things, just to make sure that we address the inequity issue of two employees that are employed the same way that get different amounts of money versus some sort of parity. I think the report also speaks to a certain level of parity with other municipalities and that sort of thing.
Those two may work in conflict with each other because you can change the formulas and those kind of things, but if you don't address the fundamental tax difference, you still have this inequity between employees.
Right. So we are definitely going to be looking at that and seeing how other people get around that, in terms of other municipalities if they don't have those same sorts of problems. We want to be able to avoid that if they're able to avoid it.
One thing I was wondering, too, when you say tax issues, are you talking about people's deductions?
Yes, sir.
Okay, so that's strictly that somebody can go from 0 to 10 or whatever.
Yes.
Depends on what their income is.
Right. They have a particular amount of time that they can do that.
And if you know how to do it, you do make those changes, and so you get a larger payment.
Yes, ma'am.
Also want to mention, we look at that very same issue during our review to see whether any employees did that exercise, and we did not note any in terms of changing exemption to make sure they get a higher pay take home before they go on IOD.
Okay. But even if it's not a matter of people gaming the system, it's still a matter of equity.
The equity issue.
And we're disincentivizing people to take deductions when we want them to be appropriate financial planning and to make the right number of deductions. And we may create inadvertently a perverse incentive to in case you end up on IOD to maximize your deductions, and that's just kind of a bad policy to have.
Right. There's no incentive to come back to work.
Yeah, that's why we make a recommendation to look into a state.
You're making a full salary on time off.
Or more than a full salary.
More than for
It's tax-free.
So, well, it sounds like this issue needs to be negotiated at the during collective bargaining. But the overpayment issue is something that is going to go into effect when we replace links in May. Any other questions?
No.
Thank you. Well, there are no more items on the agenda, Madam Clerk, so I will conclude our...
Well, let me just say,
Do you wish to note and file this particular matter?
I'm so sorry, yes.
Okay. And prior to Mr. Parks coming in, you took two other items. Mr.
Item
Parks, do you
number
wish to
one
be
is-
added to that?
yes.
Okay, thank you.
Yeah. Let me just ask one thing on this committee report. Is the recommendation that we strongly support this part of it going to EERC to be negotiated? And the other one, are we going to ask for a report back when they fix links so that we know it's fixed?
We can. The one question I had was if we needed to give the CAO direction to modify the IOD payment to the levels comparable to other government agencies. But from what I understood, that they're going in that direction and that it can only be dealt with at the collective bargaining unit.
But I think that's true, but I think we still have the ability to strongly support EERC giving that direction. I don't think we can give the CAO directly, but I think we can strongly support the EERC providing that type of direction.
To go in that direction. And then a report back on the implementation of the links replacement project?
Yeah, that would be good.
Toby? Is there anything else? That concludes our meeting. Thank you.
Thank you, Madam Chair.
We're so versatile, we go from e-signature